Hey, Jamie, thank you for joining us today. Would you like to do a quick self-intro about you and MYNA?
Absolutely. Thank you for having me here. My name is Jamie Nuttall. I'm the Director Shareholder at MYNA Accountants. I'm a fellow member of the ACCA. We are one of the earliest crypto tax accountants. I was the 2024 Crypto Tax Advisor of the Year and a long-term personal Cardano holder. We are Cardano specialists, if you like, and one of the top, if not the top, crypto accountants in the UK.
Wonderful. Looking forward to hearing your insights. Today we have a few different topics. Let's dive into the first one. General tax tips for investors and traders. My first question, what are the tax implications for long-term holding versus short-term trading?
So there isn't really a tax implication per se. If you are trading a lot, there might be an issue where people think that you are a trader rather than a general investor. This moves you from capital gains tax to income tax. So you go from 18% and 24% tax to 20, 40 and 45% tax. Now, the more frequently you trade is only 1/9 of the badges of trade, which in itself helps you determine if you are a trader or not. Aside from that, if you have lots of transactions, there might be lots of little gains and losses throughout the history of your portfolio. But overall, there really isn't a tax implication per se.
And what you just mentioned applies to the UK, right? Is that also universally recognized? If you trade a lot, you risk being categorized as a trader.
Potentially, again, this is jurisdiction specific. Within the UK, we have badges of trade. I'm sure there's something similar in local jurisdictions that will make a difference as to whether you are a trader or not. But certainly in the UK, it's only 1/9 of the question.
How are DeFi activities taxed, like yield farming, providing liquidity, claiming airdrops, things like that?
So with this type of thing, you need to start to think about the disposal of the asset as a primary cause. If you are farming and you're receiving what is known as miscellaneous income, there's no disposal just yet. And that will be taxed under the miscellaneous income category within the UK. So that will be 20%, 40% and 45%, no national insurance. However, once you dispose of that asset or the initial capital, that would be capital gains. Now with airdrops, this is my most common asked questions. With airdrops, sometimes it is taxable upon receipt. Sometimes it isn't. The criteria for that is, number one, it is taxable upon receipt if it is part of a trade, or two, you did something significant to receive it. Normally it's like a liking and sharing something. Maybe it's a survey, something like that. If you didn't do any of that and it just appeared in your wallet, then it could be tax-free. The actual base cost would still be the market value at the point of receipt, which has massive tax implications when you do dispose of it later on. Hard forks, for example, when a new asset arises, you can effectively roll the base cost of one asset to the other if you would like, whatever seems sensible. You might be able to write off the initial cost for the first one and then have a zero cost for the second asset, or you might be able to roll the complete value of one asset into the other and the first one's sort of deemed defunct. In terms of staking, that would be miscellaneous income. Again, you do have £1,000 tax-free per year as a trading allowance in some situations.
So about the airdrop, it sounds like if you somehow worked for it, then it's taxable.
Correct. Yes. If you have done anything significant to receive it, then it would be taxable at the point of receipt under miscellaneous income, which is at 20, 40 or 45%.
Immediately, as soon as you receive it, you want to sell it because you already know it's taxable.
Possibly. So we can't give financial advice, but from a tax perspective, the issue you might have is you receive, say, an asset for £10,000 and say that's taxed at 20%. So that's £2,000 tax that you already owe. In the case where you hold that asset, and it can be quite volatile depending on what type of crypto asset it is, it were to drop to £1,000 worth of value and then you dispose of it, you've still got £10,000 set of income with £2,000 worth of taxes to pay, and then a £9,000 capital loss in this made up scenario, which cannot be used against the initial income. So although it's only worth £1,000 now, if you dispose of the whole lot, you still owe £2,000 tax. So yes, a tax idea would be to dispose of an amount equal to roughly the tax amount and put that away in fiat or stablecoin or something safe that's not exposed to crypto. If it were to all go up, it doesn't matter. Nobody's going to be worried about that or asking this question. The problem is if it were to go down. So yes, de-risk your tax amount. Otherwise, you're effectively reinvesting your tax amount that you should be putting aside in said asset.
And that's different from staking rewards, right? Because staking rewards, you're just passively receiving it.
Correct, yes. It's tax in a similar nature where at the point of receipt or when you have what is known as beneficial ownership, you then owe taxes at that point. Usually that could be when you click claim, though that is it's a big gray area.
When it comes to gas fees, especially certain chains have quite high gas fees. Are these fees deductible?
Yeah, absolutely. So these fees, you'd normally use some form of software to calculate your tax position anyway. And most of the software build in the fees as a cost, as a deduction, though some don't. So yes, be aware of that. They are tax deductible in most situations.
How can someone make their tax filings easier? What are the good habits to have?
The first one will be to keep a list of all of your wallets. I have many clients who at some point say, oh, I forgot about that wallet, or I don't remember my entire portfolio. In certain situations where you've only put like a tenner in or something, it's not the end of the world. But if you're seeing large volumes of transactions or large values going through a wallet, you definitely need that. So yeah, number one is keep a list of wallets. Number two, if you have Bitcoin, definitely keep your XPubs, so extended public keys. The second one is to keep up to date with your bookkeeping. Now, if I said to you, Dumpling, what did you do 4 years ago compared to what did you do last year? You're far more likely to remember what happened last year. So if you keep up to date with your accounting, with or without an accountant, you should be able to remember what happened a lot easier, a lot faster, and a lot more accurate. Finally, this is sort of a bonus thing. Always keep your CSV files for the wallet addresses that you own. You may be able to use API keys and API integrations with software, but I would still recommend you keep a copy of your CSV files for two reasons. Number one, there will be holes and gaps you need to plug. For some reason, API keys and CSV files don't tend to match. And number two, if HMRC were to ever question this, or if they were to question anything, they tend to ask for the CSV files, not the API keys, because they can't really use that. So I would recommend you keep those just in the case you ever get what is known as an investigation in the UK, or maybe it's called an audit in America.
So you mentioned accountants. How does one know if they need an accountant, especially a crypto tax accountant?
It is subjective. It depends what you're doing, and it depends on the individual as well. So for example, one person might be really good at data, which will be have a higher tolerance in terms of what they need before they need an accountant. Whereas someone who's not particularly savvy with that type of thing might need an accountant a lot sooner. So if you are someone who just spots trade, you likely don't need an accountant unless it becomes too much in terms of volume, or maybe you just don't understand what the tax implications are. Why would you ever need an accountant? Well, if you're in a situation where it's a lot more complicated, lots of airdrops, maybe you've got NFTs on Cardano, which is very complicated compared to NFTs on other chains, then that's when you might want to have an accountant.
If one were to have an accountant, usually, how do these accountants decide their fees?
So I can't talk for other accountants. The way we decide our fees is a combination of things. Number one is the volume, so volume of transactions. Number two is the quality of data, the availability of data, the complexity of what you're going into, what type of protocols. Again, Cardano NFTs would be much more expensive than just spot trading. It's a really big matrix and it's hard to pinpoint, but I've been doing this for quite some time now, so we can do it within the hour.
As I understand it, with your services, you charge by the number of wallets and number of transactions.
Yeah, number of wallet, number of transactions, the availability of data, the quality of the data, when we're talking about missing data as well as, I suppose, your knowledge of your portfolio. If you know exactly what's going on, it's going to be a lot easier than if we have to go back and forth quite a bit. I've seen it plenty of times where two people have very similar portfolios, and one will be charged twice as much as the other because that one does not have a full list of their wallets, or they don't know exactly what's going on, or they've interacted with something that causes issues not only with them but with us.
Most of my viewers are Cardano holders and investors, and of course they're curious to learn more about tax reporting relevant to Cardano. How is ADA taxed in the UK and some other jurisdictions in the world? Is there anything special to ADA?
Not really. I mean, there's certain things that make it a bit more difficult to follow, but overall, it's exactly the same, just like any other coin or even token for that matter. The sort of general rule of thumb is there's tends to be some form of capital gains or capital loss upon disposal, miscellaneous income for rewards, and any airdrops.
What about Cardano staking rewards? How is that taxed?
So that would be taxed at your income tax threshold. So whatever marginal rate that you're at. So again, 20%, 40%, or 45% at the market value at the point of receipt. Please remember, in the UK at least, you have something called a trading allowance that may be available to you, which means you get the first 1,000 tax free. There is talks about this going up, and this is somewhat breaking news in the last few days, that by 2029, at least in the UK, that 1,000 tax free will end up being £3,000.
How does one make use of that? Do I need to do anything special to use that £1,000 allowance?
You don't need to do anything special, but within the tax return, there'll be a tick box to say use trading allowance instead of expenses. And then you can use up to £1,000. You can't create a loss or anything. So it's not anything technical, but there is a specific thing you need to do to make that declaration and claim.
And like you said earlier, it is taxable at the time of receipt, at the value when you receive it. So
Right.
when you receive it, if ADA was worth $1, but you didn't sell, it then dumped, you still owe HMRC or your tax authority the original $1 value.
Correct. So the tax would be applicable to the $1 value, despite it dumping, say, down to, I don't know, 5 cents, for example, or something like that. So yes, it is very important that at the point of receipt, you make a determination on the tax and perhaps move some of your tax money away.
You mentioned earlier there's certain intricacies or personalities to the Cardano blockchain that makes it a bit more challenging when it comes to tax reporting. Can you expand a bit on that?
Yeah, absolutely. The reason for this is the eUTxO, which is a combination of the UTxO that Bitcoin has and smart contracts. So that combination makes it a lot more difficult. So what can you do to help with this? Well, we need the public key for your staking wallets, for example. This should make it a lot easier. If you know what's going on, that helps tremendously as well. So any accountant, even us, will need to ask certain questions. And the more you know about your portfolio, the easier and quicker and more accurately you'll get to the answers, and therefore lead to a more accurate accounting and therefore more accurate tax work. There's also a tool called Dex Hunter, for example, that might help with the exporting of trading data for anyone who's heavy into DeFi. So those sort of things will significantly help with Cardano specifically. But I guess the number one is to know what you're doing, what you have done, and that you have all your data.
You mentioned the public stake key, right? That's something that will help you a lot.
Yes, absolutely. Now, this I don't think is common with other chains, but it's certainly needed with Cardano because it's almost impossible without it.
Eternal and I believe other Cardano wallets, they allow you to export the CSV. Does that work just as well?
Yes, I think it will certainly not hinder, and the more data you have, the easier it will be overall. And it might be a case of piecing this puzzle together with lots of different angles to getting what you need to in the end. So yeah.
What's so special about Cardano NFTs that makes it difficult, or is it just the same eUTxO model?
That's exactly it. Yeah, so it's the eUTxO. Most other accountants who may be able to do crypto will probably not stand a chance with Cardano just because it's completely off the wall. So you really need to go to someone like us who are a specialist, someone who's a specialist in crypto and Cardano, because it is a different ballgame.
Do accountants talk to each other and kind of complain about which chains are really difficult?
Yes. Yes, so there's several groups, if you like, where people bounce ideas off each other because it's a new area, relatively new area, and no one can do it alone. Cardano isn't really talked about too often in these circles, but when it is picked up, it's always a case of the data just isn't there, or I'm not sure how to get the data, and we tend to be the ones kind of helping out with that with Cardano specifically.
When it comes to moving ADA from centralized exchanges to self-custody wallets,
Yep.
be it hardware wallet or a web-based wallet, how are they taxed, or is it taxed?
Now, that's a very good question. Effectively, there's no taxes here because you haven't disposed of the asset. As mentioned earlier on, it's about beneficial ownership. So when you move from one wallet to the other, if you have beneficial ownership on both wallets, it's the same as you moving some money from your checkings account to your savings account. As long as you wholly and exclusively own that wallet, then there should be no tax implications whatsoever. There might be some costs for transaction fees that are deductible, but that should be minimal in the grand scheme of things.
What about when you move it, say, for example, from your Eternal wallet to Coinbase, but you haven't sold?
As long as you own that Coinbase account, then they shouldn't be a disposal. I know some people are going to complain and say, hold on, not my keys, not my wallet, therefore I lose beneficial ownership. I would say that's a can of worms you don't want to open, because that brings up all sorts of issues.
And finally, is there any UK specific rules that apply to Cardano that ADA holders should know about?
There isn't. Nothing specifically to Cardano. Everything should be in line with most other crypto assets.
Okay. How should Cardano holders keep track of their staking rewards transaction history?
Number one would be to keep your wallet addresses, a list of them anyway, somewhere safe. I know a lot of people don't like putting all their wallet addresses in one place, but you're going to have to for your accountancy needs anyway. So that's number one. Number two is to use software. It doesn't matter if it's with us or another accountancy firm or on your own. If you don't have software, it's going to take a lot longer and cost a lot more, because even if it's your own time, time is money. So always use software.
Although you shouldn't solely rely on them?
Correct. So the softwares will deal with most of the issues, including the bed and breakfasting rules, Section 104 pooling, or in some other countries you've got first in, first out, last in, last out. And you can set the settings to deal with that automatically without you needing to do that. That's the biggest sort of aid with these softwares. Aside from that, it allows you to be malleable with the type of accounting you need relative to you and what's appropriate as well, rather than doing it manually on Excel, let's say, or even a bit of paper.
Cool.